Yeah, hello and welcome to another update video about Bitcoin. In this video, we want to take another look at the movement since June, and then I would like to give you, with as much clarity as possible, the scenarios that we're now looking at, because it's a quiet day, which is great on Saturday, and sometimes I take the opportunity just to give you an outlook for the different possibilities, key pivot points and decision points, and the threshold levels for each of these scenarios. And also my primary expectation, even though I don't like the term primary expectation. But before we dive deeper into the analysis, first a few words about the sponsor of today's Bitcoin video, Chartprime. Chartprime is a service that provides specific TradingView indicators. There are 5 specific and unique indicators that you can only get through Chartprime if you sign up to one of their plans. These are based on quite complex algorithms and formulas and can be helpful in identifying trade setups, which means they can provide additional signals that could support your trading. Indicators can, for example, also be useful to support Elliott Wave counts to give more confidence. Of course, you don't need to apply Elliott Wave to use Chartprime, and the combination of their indicators alone can provide trade setups and signals as well. They currently offer a 30% limited time discount, so if you are interested in this, check it out. Of course, bear in mind that no indicator works 100% of the time. Here's an example of the Bitcoin chart with one of the range indicators. This indicator combines various indicators in itself, so you can adjust it to your needs, but it basically shows your range resistances, different support resistance levels based on different time frames, and it categorizes them based on their relevance. And this indicator provides you with dynamic support and resistance bands to which the price is reacting. And if you're interested in checking it out, make sure that you use the link in the video description and on their website. You can also read through testimonials and you can join their Discord community, which you can join in case you have any questions about how to use those indicators. Because it gives you a false sense of, my expectation always has to work out, which it doesn't. The thing is, and that's one of the greatest benefits of Elliott Wave, and I don't think there is any other method that gives you that clarity. It gives you, so the Elliott Wave method is one of the most disciplined methods of market analysis which is out there. Yeah, with any other method, you draw trend lines, you do this, you do that, it's very subjective. The Elliott Wave method, of course, has a subjective element as well, but it has very, very clearly defined rules and guidelines. And out of the theoretical infinity of possibilities which there is in the market, the market can do anything, what it wants. Yeah, nobody is gonna stop the market. Yeah. Also, I cannot will the market to do anything. I don't have my crystal ball here, and I don't have my tea leaves here, and I don't have the star map here, so I can't really look into the future. Yeah, but what I can do is, based on the rules of market structure, the application of rules and guidelines by the Elliott Wave method, which, by the way, many Elliott Wave analysts do not apply correctly. But if you apply them correctly, you can trim down the list of possibilities which there is in theory into a very, very small list of probable counts and scenarios, maybe 2 or 3. And if you have that, then you rank them by, okay, which count applies best to the rules and guidelines, which count fulfills most of these rules and guidelines, and that gives me my primary count. Still though, if you have probabilities very close together, it could easily be that the second count or the third count is working out. And if you have a map of all these possibilities, and if you know which of these scenarios is going to work out, and if it doesn't work out, then you have the next one to go to. That gives you such a great advantage in the market. Yeah, a lot of people don't understand this benefit. They think, right? Someone said in one of the last videos, I'm just happy if you just give only one scenario, even if you're wrong. I don't mind. At least I can do something. But that's not the point. That's not the point. Actually, that puts you into a disadvantage in the market, because if you only know one scenario, it's pointless. Yeah, what do you do if it doesn't work out? Then you're screwed. So you need to know about your environment. Not only, you need to know about your environment in battle as well, right? When you're don't want to say at war, that's rubbish. But you know, when you are even on the chessboard or wherever, you need to know about the different possibilities and probabilities. If you don't, you're at a disadvantage. So I think it says it actually in the Elliott Wave book, the wave principle, that if you fall off a horse, off the back of a horse, it's great if you can land on top of another. Yeah. So if one count fails, you've got another one straight to go to. Yeah. And that's the best. That's the key advantage, one of the key advantages of this method, that by the application of the rules and guidelines, you get 2 or 3 counts. If one fails, you've got another one to go to. Because if one fails with a very high probability, the second one is then going to work out. Right, so let's first of all take a look at the movement since January. We had here this possible expanded flat pattern ABC. That's still what I'm leaning to. So I'm still leaning towards the possibility of another low in Bitcoin. ABC is a corrective pattern, and it could mean that this C wave, which is very bullish at the moment, but it's only possibly a C wave. Yeah, it's a 5-wave move up. And this could just be a C wave in a larger corrective pattern, a so-called wave 4, which could eventually come down in 5 waves in a wave 5 and make a new low. Okay. So really, just because we have a lot of green candles at the moment, it doesn't tell us that the bear market is already over. But what will tell us that the bear market is over, it is going to be if we complete these 5 waves, which we could have completed already or will have completed very shortly, and then we come down in 3 waves, not in 5. So this is going to be the area that I will scale in for the long term for Bitcoin again, which I did here in the bear market. Yeah, and I took some profits up here and up here. And if we come down into this region, I will scale up again for my long-term portfolio, DCA, but also for swing trades. And if this support area doesn't hold, then it doesn't hold. Then we've got a stop loss, right? And then we're probably going to carry on with a bear market. Where is this area placed? This area is placed in the region between the 50% retracement, round about 20.4K. That would be sort of the minimum I would expect it to come down after this current advance is complete. Yeah. You will already get a first reaction probably to the 21.5K level, which is the 38.2 fib level. But eventually it should get into this region. This is the wave 2. After this could be, in a bullish interpretation, a wave 1. Then we come down in a wave 2. Now, if we make one more high here, which I still primarily expect in the current wave to the upside, then these targets will move to the upside. But this is based on the current highs. How is this decline most likely going to work out? Whoops, that's my phone, sorry. Well, in the corrective structure, wave 2, this would, hopefully nobody got a heart attack right by that. Anyway, if we come down in the wave 2, it would most likely be an A wave, a B wave, and a C wave. And most likely a so-called sharp correction, a zigzag correction. And it will be most likely a very strong drop. Why is that the case? So first of all, of course, we need to complete the current advance, the current impulse. When we come down, in the most likely case, we will come down in a wave A, which has 5 waves, which would be an impulse. So it will probably crash down quite a bit, maybe very quickly to the 38.2 Fibonacci retracement level, here at around 21.5K. Why is that the case? Because a wave 2 most likely, in most cases, consists of a zigzag pattern. That's a wave 2, which often is coming across as a zigzag. Yeah, you can get flat patterns as well, but it is not going to be a flat pattern, only with a lower probability. Yeah, I don't think it will be a flat. It's probably going to be a zigzag, 5 waves down, and it's going to be a fast correction. Then we probably get a B wave, not very strong, rather shallow, and a C wave down. And then we probably come into this wave 2. And the A wave will probably react to the 38.2 fib retracement. That is what often happens in the crypto market with an A wave. So you can already start to scale in here. What I cannot rule out is that the wave 2 will be shallow eventually. So maybe if we already react to the 38.2 fib level, yeah, as Polkadot did it as well, it could be the wave 2 is finished here and we rally in a third wave, go all the way up to above 30K straight away. So I will already use this area to start to scale in. then wait for the B wave, depending on what it does, maybe take some profits, maybe not, and then scale up again in the C wave if we come down into this region, into the 20.4 to 17.5k area. In whatever Bitcoin does, it needs to hold 17.5k, or we probably will drop down to 14 to 13k, continue with a bear market, which is still what I'm leaning towards. Why am I leaning towards? Because the daily and the weekly count, or let's say the weekly count, is still down. And until the weekly trend is changed, I'm going to give benefit of the doubt to the weekly count. That is why I might sometimes sound a bit bearish, but really what I'm pointing out is risk management and that the bear market has not ended officially yet. But if we hold this support area, then we can say the bear market has most likely ended. That's when we get confirmation. Confirmation is not certainty. Be aware of that as well. But yeah, this is sort of going to be my strategy. Now let's zoom in. Let's take a look at the short term. So in the very short term, I'm still expecting it to push higher. Okay, so let's go to the 30-minute chart. Why do I expect it to go higher? Because we don't really have a high probability pattern complete yet. We did so far hold this green buy area again, which is great. And anybody who bought in here is already in profit. So you can move up your stop loss to at least break even. I would always suggest that. We do see an inverse head and shoulders forming here. It's not a perfect one, but we do see a potential inverse head and shoulders forming here. We see that currently on several crypto charts, by the way. We've got a neckline here. I mean, it's not very well defined, okay, but I would say roughly here at 24,900. If you draw here now a resistance line, you can see we have various touch points at that level. 24.9k, 24,922. And if we break above that level, I think we can get the trigger to break out here to higher, maybe already on the weekend, and maybe we top here on the weekend in this move. So primarily I'm still expecting higher as long as we're holding above the $23,300 level. This is the key level. Let's call it 23,340, sort of in that range. You have a few inaccuracies between different exchanges. So ideally we get at least one more wave up. I don't know if we get two more waves up. And then we will complete here this movement, most likely that started in November. What I'm observing as an option as well, it's not my main expectation, but of course what could happen is that this will end here, as I just suggested, and we will come down in this ABC correction in a wave 2. It could also be that the entire move here will extend, that this fifth wave of the first will become much longer, and we would then get something like this, to above 30k. Not my primary expectation, but I will give you the best, to the best of my abilities, always the relevant support areas that will help you scale in if you want to. And that will be the threshold levels between the different scenarios. But here, we are pushing against the ceiling just now. So this is something to watch, okay? This inverse head and shoulders. We see that on several other charts at the moment. Breakout patterns. I don't like to trade breakouts, For me, this would have been here, pullback, entry point. But this is going to be interesting. And that's what I'm observing at the moment. So key is here, this level, 23,340. Okay, that's my update about Bitcoin. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.